Welcome to Group Insurance Daily Pulse, your rapid-fire dive into the actuarial and distribution dynamics shaping the benefits landscape. I'm Aria the Actuary, dissecting the P&L implications and regulatory tripwires.
And I'm Dorian the Distribution Expert, here to spotlight market opportunities, ROI, and the employee experience. We've got a packed 15 minutes, so let's hit it.
Segment 1, Q1 2024 Group Voluntary Benefits Sales Surge.
Kicking us off, Q1 2024 saw a remarkable surge in group voluntary benefits sales, up 12.8% year-over-year, hitting $2.6 billion. We're seeing critical illness lead the charge at 18.5% growth, followed by accident at 16.2% and hospital indemnity at 14.9%. The sweet spot? The 500 to 4,999 employee segment, which grew 14.1%.
Undeniable is a strong word, Dorian, when we're talking about sustained profitability. While the top-line growth is certainly eye-catching, my first question is always about the bottom line. Are these products being priced adequately to cover the accelerating claims experience we're seeing, especially in critical illness and hospital indemnity? We need to scrutinize loss ratios for these segments. The 18.5% growth in critical illness could signal an increased awareness of claim triggers or an aging workforce, both of which escalate payout frequency and severity.
Aria, those are valid concerns, but the market is adopting.
Perceived value doesn't pay claims, Dorian. And while integration sounds promising, actual implementation often introduces new points of failure and significant upfront capital expenditure. We need to see sustained favorable claims development and robust reserving practices, not just top-line revenue growth, to declare this a truly healthy segment. And ICD-10 code specificity doesn't negate the potential for moral hazard or adverse selection, it merely clarifies the trigger. My focus remains on solvency and the actuarial soundness of these expanding blocks.
Moving on, we're seeing major carriers report a 20% reduction in claims processing time with AI integration. Early adopters are also touting a 15% reduction in manual review hours. This isn't just incremental improvement, it's a paradigm shift. Predictive analytics are enhancing fraud detection, automated initial claim triage is accelerating payouts, and real-time data validation is drastically improving accuracy. This translates directly to improved customer experience, faster benefit delivery, and significant operational cost savings for carriers. The ROI on these AI investments is proving substantial, freeing up human capital for more complex case management and customer service interactions.
Paradigm shift often precedes a regulatory headache, Dorian. While efficiency gains are attractive, my red flags are waving. First, AI model bias. If the training data reflects historical biases, the AI will perpetuate them, leading to potentially discriminatory claims decisions. This has massive regulatory implications under ERISA's Fair Claims Practices and state DOI anti-discrimination statutes. How are carriers auditing these models for bias and ensuring explainability? The black box problem is a significant concern for regulators, demanding transparency in claims adjudication. Second, data privacy and PHI. Feeding vast quantities of sensitive medical information into AI systems introduces new vectors for data breaches and compliance challenges under HIPAA. Third, what about the appeals process? If an AI denies a claim, how does a human effectively review and overturn that decision if the AI's logic is opaque? This could complicate ERISA's stringent 180-day appeal process requirements.
Aria, the industry is acutely aware of these challenges. Carriers are implementing robust AI governance frameworks, including human-in-the-loop validation for all high-impact decisions and continuous model retraining with diverse, anonymized datasets to mitigate bias. Explainable AI, XAI tools are being developed to provide audit trails for AI-driven decisions. Data privacy is paramount, with advanced encryption, tokenization, and secure data environments.
Human in the loop is often a bottleneck, not a solution, if the AI's output is taken as gospel. And explainable AI is still largely aspirational in complex neural networks. I'll reserve judgment until we see several years of audited, unbiased claims data, robust internal controls, and clear regulatory guidance from the DOL and various DOIs on AI's role in claims adjudication. The potential for systemic unfairness or even class action litigation if bias is proven is a P&L nightmare.
Let's pivot to a benefit that's rapidly gaining traction: pet insurance. Enrollment jumped 25% in large employer groups, with 60% of employers with over 5,000 employees now offering it. Averaging $45 a month, it's a low-cost, high-impact benefit, especially appealing to younger demographics who often consider pets part of the family. This isn't just a perk, it's a strategic move for employers to enhance their total rewards package, boosting employee retention and attraction in a competitive labor market. It addresses a real financial stress point for employees, demonstrating a holistic approach to well-being that extends beyond human family members.
Dorian, low-cost, high-impact sounds wonderful, until we talk about adverse selection and claims inflation. Pet insurance, much like human health insurance, is susceptible to individuals enrolling when their pet is already sick or at high risk. What are the underwriting controls here? Are we seeing pre-existing condition limitations? And if so, are they clearly communicated? The average premium of $45 a month, is that actuarially sound given the escalating costs of veterinary care, advanced diagnostics, and specialized treatments? We're seeing claims inflation in human medical. There's no reason to assume pets are immune. Who is administering these plans? Are the carriers sufficiently capitalized and experienced in managing pet-specific mortality and morbidity tables? Regulatory classification is also a concern. Is this regulated as property and casualty insurance or a form of health insurance by state DOIs? This impacts solvency requirements, consumer protections, and licensing. There's potential for significant administrative burden on employers, even if it's voluntary, managing multiple vendor relationships.
Aria, the market is maturing. Most group pet insurance offerings do include waiting periods and pre-existing condition clauses, with clear definitions, similar to human health plans. Carriers are leveraging vast databases of veterinary claims data to refine pricing models and actuarial tables, incorporating breed-specific risks and age-related claims patterns. Many established P&C carriers are now entering this space, bringing their expertise and capital. From an administrative standpoint, integration with existing benefits enrollment platforms is simplifying the process for employers, often managed through a single benefits portal. The loss leader argument is short